Thank you for joining. I'm Wei, founder of Homodeus Research, an equity research firm focused on ASX growth companies. And today, we're speaking with Dr. Anthony Noble of Xenitra Group. Xenitra is an ASX-listed brand acceleration partner, helping Western FMCG nutraceuticals, OTC medicine, and personal care companies enter and scale in China. The company has generated over 70 million in sales since 2024. Now, to me, there's three things which make this a compelling story. Firstly, the Opal platform, one of the first real-world applications of tokenization in mainstream FMCG distribution on the ASX, with over $1.1 million in sales and over 400 distribution partners within its first 7 weeks. Secondly, a significant OTC medicines opportunity in China, where the acquisition of Fukang OTC Pharmacy creates vertical integration from brand owner to end consumer. And thirdly, in my view, this is an early stage turnaround, with execution milestones accumulating fast. A new strategic direction, a live platform, a completed cap raise, and new brand launches, all within a compressed timeframe. With 3 growth pillars heading into FY27, this is a timely moment to hear directly from the chairman. With that, I'll hand it over to you, Anthony. Thanks.
Thank you very much, Wei. Yes, I'm Anthony Noble, Non Exec Chairman of Xenitra. I take the lead on presenting in Australia as the team running the business is all based in China. But I think exactly as Wei pointed out, this has been a company that's really undergone a fundamental transformation over the last 6 months or to 1 year period. So I'm really happy to present you a summary of the business's strategy for the coming financial year, as well as some of the initial achievements in the early stages of the turnaround. So effectively, the business is a brand incubator and accelerator. So we take brands from around the world and we sell them in Asia, primarily in China. And we do this in a number of different channels. And effectively, these are the best products in the world, authentic products, and we sell them to customers on a very large customer database who are loyal customers. And we're building exactly those 2 pillars for the brands that we work with. So quite a small company, I think fundamentally one of the most undervalued companies that you would find, primarily because the business has been through a significant transformation over the last few years. It was formerly known as Biomiq, and that was a business that was focused heavily in the Chinese tourism industry, with retail shops in Australia serving the Chinese tourist market. Obviously, that's a business that was severely affected by COVID, and after that, the business has gone through a rebuilding phase. And the termination and the end of that rebuilding phase kind of came with the rebrand to Xenitra. A new code for the company is XEN, with a new brand and identity and a much more focused strategy around high velocity FMCG products across 3 sales channels. And I think a very, very exciting opportunity in 2 particular areas, our OTC medicine sector, as well as our real world asset or RWA tokenization. You'll hear me talk about RWA tokenization throughout this presentation, and that stands for real world asset tokenization. So the business is actually not a new business, it's a new brand, but it's been a business that's operated for many years. And since 2024, when the emergence of our new sales model, which has been primarily focused on e-commerce in China, emerged, the business has recognized more than $70 million worth of sales for a number of leading international brands. And from that core business, which we call the nutritional business, we've expanded now into 2 very exciting new segments of OTC medicine and RWA tokenization. So we do work with some of the largest brands in the world in our nutritionals business, and we have experience in managing brands and working with brands, and particularly accelerating the growth of those brands in the Asian market. So these are household names across the nutrition, vitamins, minerals, and supplement category, as well as food, and increasingly into the health, wellness, personal care, and OTC medicine segments. So as I said, these are 3 distinct channels of sales and 3 distinct business units within the company, and they have different shapes and different commercial opportunities within them. And so I'll break those down for you across our 3 sectors that we talk about. Nutritionals, and so this is really the evolution of what used to be what people referred to as the Daigao business. So a business around infant formula, protein powders, nutraceuticals, and other big branded products that have high demand in China, but that's but highly commoditized market. OTC medicines, which is a new and emerging segment that has growing very fast in China, which is the sale of internationally branded over-the-counter medicines. So think about everything you would buy in a chemist without a prescription through e-commerce and retail channels. And the newest part of the business, our RWA tokenization part of the business, which is really a novel and effective way to sell products, which I'll give you a lot more color about a little bit later in the presentation. So to summarize those channels in the business, really the nutritionals part, as I said, is primarily evolving for us into a B2B platform. So it has been something where we managed quite a complex sales and supply chain. That's something that over the last 12 months has been dramatically simplified. This is a part of the business that is really a commodities market now, where the major brands are in the channel in controlling price, but the volume that can be achieved in that channel is really significant. The margins that are recognized are quite small though. So we've been focusing on reducing costs around this part of the business, reducing the complexity around this part of the business, and bringing that to a point where even though the margins are small, we can recognize good returns for shareholders on the basis of fast turnaround of capital, short cash to cash cycle, and large B2B contracts are predominating in that part of the business now. The OTC medicine part of the business, which is really a new channel that's emerging and growing in China, which is, as I said, everything that you would buy in a chemist. So that could be small molecule medicines that don't need a prescription. So think about sectors like cough and cold, anti-allergy, respiratory illnesses, gastrointestinal, those kind of sectors, as well as structure function benefit type products, which is what we would call in Australia complementary medicines, or what we would call in the US dietary supplements. Now, the margins through this sector are a lot more healthy, and this is a sector that is really still emerging. So we like to think that this OTC medicine cross-border e-commerce sector in China is really where the infant formula and nutritionals business was 5 to 10 years ago, and with the kind of growth potential that we saw for that. But without the major players in the market controlling price, the margin capabilities there are extremely high. So something that we're going to focus on a lot more in the future, executing on that, as well as exploring not just partnerships with brands, but our own brands and generic offerings in that channel that could even be higher margin products for us. The third and probably most exciting part of the business is the RWA tokenization part of the business. Now, this is a blockchain-enabled closed-loop ecosystem where products are tethered, real-world products, so real-world transactions are tethered to the blockchain with a token. The token effectively can do a number of different things. It's able to authenticate products, but it's also able, and most importantly, it acts very much like a loyalty or rewards point. So enabling membership in a rewards program and the ability to use the point to get rewards, products, and benefits through that loyalty and customer system. So this is very much a self-reinforcing commercial flywheel for the business that draws people into the ecosystem, rewards the players in the ecosystem from wholesalers to consumers, as well as the brands providing really important benefits to them around traceability and absolute transparency in the supply chain. And this is a part of the business that can command extremely highly profitable sales. So we're going to be focusing as a business on the OTC medicines part, which is a large established market. That's where the cross-border e-commerce part is a growing segment of a growing market, and the RWA tokenization business, which is a very innovative way to sell products that are exclusively sold by us through a closed ecosystem, where we really do have a real relationship with our customers and with brands. So the nutritionals business has been the core of the business and remains the core of the revenue in the business, and it's something that has been, as I said, streamlined and revitalized. We delivered around $8 million of sales in that segment in the last quarter after completing the company restructure and turnaround and recapitalizing the business. So the demand for those products is very much still there, and the company's been able to lift sales in that segment back to the historical FY24 levels after going through the turnaround period. And we have as I said, we have a very strong focus now on large B2B customers that then feed the B2C channels. And this is very important in terms of profitability for this channel, because what that does is allow us to control costs in a way that ensures that even though the margins are modest, the fast turnaround of cash, and we turn around cash in that segment in around 10 to 14 days, fast turnaround of cash, the annualized return on capital can be recognized as quite high, and the costs for servicing that business have been dramatically reduced as we've moved to really working with quite large B2B contracts being the underpinning of that. Probably most notable for shareholders is that in March this year, we signed a large $30 million contract related to Danone products with a conglomerate in China called RockCheck. RockCheck is a trillion yuan revenue business. It's an absolutely massive customer to have. And so these kind of customers and these kind of big brands, big contracts that are reasonably cost effective for the company to service are the kind of things that we're going to continue to do in that commoditized nutritionals part of the business. Also an agreement that had a very important second part of it, which was our Australian subsidiary was established as an authorized supplier into the RockCheck group. Sounds administrative, but it's actually very important because what it allows us to do is procure goods in Australia and ship them into a very, very large network within a very, very large multinational conglomerate in China. So many other products can enter into that framework agreement over time. And that took a lot of time for the team to deliver. And Tracy and her team in China did a wonderful job getting through that process. And that's actually a really huge asset that the company has in terms of that channel into the market, and not just into a small consumer market, but into a large B2B market with a huge multinational partner. So evolving from the nutritionals business, the over-the-counter medicines business is what we think is the next big thing. It's the next big cross-border opportunity in China, and it's something that has been changing and evolving in a very positive way over the last few years. So cross-border sales of international OTC products has been allowed in China for a few years, but the number of products and the nature of the products has been evolving over time. Effectively, each year, the Chinese government is adding more and more products to the list of things that can be sold cross-border. So it was originally a very limited number of medicines type products that could be sold. And that range of medicines is now really expanded to quite a comprehensive range of products that you would be able to see within a pharmacy. Also very interesting, some of the initial data that we have seen is that the consumer behavior in China around the purchase of OTC medicines has also been evolving. The market has really been maturing into a more e-commerce friendly market. So around the turn of the century, it was a fraction of a percent of sales of medicines that would be taking place through an e-commerce framework. Almost everything was done through hospitals and pharmacies. That part of the market is now around 25 to 28% of the total consumption of OTC medicines is coming through digital e-commerce channels, including the cross-border commerce channels. So consumer behavior in China has started to evolve to really embrace e-commerce, particularly for things like pain relievers, like cough and cold, things to treat minor ailments. People are not wanting to go into pharmacies or hospitals to be dealing with those things. They're self-medicating, which is a big trend around the world, and that's now come to China through this e-commerce framework. And so we think this is a really significant growth opportunity for the company. And we identified this last year as a key part of the strategy for the business to go forward. So the steps that we took were to obtain a wholesale pharmacy license, which we were granted in December this year. And then in order to operate through the cross-border channel, we needed to obtain a retail pharmacy license. So we made an acquisition of a small company called Hong Kong Fukang Trading Company, which was about a $100,000 acquisition. We brought the team, the warehousing capabilities, the physical pharmacy in Hong Kong, and the e-commerce skills and the online stores into the Xenitra family. And we're now building that business as a priority. Our wholesale license allows us to make further acquisitions, but at this time we don't plan to make any imminently. But there is the potential for us to acquire further online and physical pharmacies under our wholesale pharmacy license that we have. So this is a huge growth opportunity. We have now got all of the regulatory pieces in place for us to be able to do that at both the wholesale and retail level. We've got the main storefronts on the main platforms, and the most important one here is jdhealth.com. And we've recruited a very high-powered leadership manager into the team to run the business, who actually comes from JD Health and was quite a senior person there, who's going to spearhead this initiative for the company. So everything that we need to be able to effectively execute on the OTC channel has now been put in place, including the leadership and the people on the ground. And so for us, the business is about now starting to evolve our brand partnerships, starting to get those multinational brands into the store through the master distributors, as well as evolving our ability to put our own products on there over time with partnerships such as with generic companies. Finally, and probably the most exciting and interesting part of what we identified as the go-forward strategy for Xenitra and are now operationalizing is real-world asset tokenization. Now, this is something that's built on the blockchain, but it is not something that you can really equate to the kind of crypto or NFT assets that people might be familiar with blockchain. These are real-world asset tokens. So real-world asset tokens are a blockchain asset that is tethered to a physical product existing in a real supply chain where physical products are sold and bought. And we're taking existing relationships that we have and existing products, and we are putting the tokenization framework around them. So these are real products being sold to real consumers with real assets, and the token is attached and effectively is given for free with the product to the customer. And so I'll take you through this because it's something that is actually quite familiar to many of our investors in Asia, and many of the people in China and Asia are quite familiar with this. The big brand, really big brands use this. Louis Vuitton, Sheraton Hotels, major brands use tokenization and RWA tokenization for purposes including rewards and authentication in their ecosystems in Asia. But for Australians, this is something that's quite new. And so I really like to use the analogy of something that Australian investors can understand, which is something like a Qantas frequent flyer point or a Flybuys point, which I think we all understand quite well. The ability for those programs to drive consumer behavior as well as to give value to customers, but also to give value to brands by making things more aware of them. So how do RWA tokens work, and how does our Opal tokens work at Xenitra? So effectively, we are off-taking from exclusive brand partners. We've got two brand partners that we're working with at the moment. One is EZZ and one is Biomiq Skincare, who just signed up to be our second product to launch. So we have contracted offtake from those partners, and we then turn those products into sales as we sell them through into our distribution network. There's around 500 distribution partners in our distribution network at the moment, as well as many online store operators. So these products are sold at reasonably high margins through the ecosystem, and with those margins, we fund the token ecosystem as well as the cost of sales and the marketing activities that are associated with them. So the token is tethered to a product as it is sold to a customer, and that customer could be a wholesale customer, but could also be an end consumer. So every part of the value chain is recognizing some tokens as the transactions happen, and those exist in a digital wallet. So the tokens are then issued, they go into the wallet of the wholesaler, or they go into the wallet of the consumer automatically. Cash from the sales is allocated to a token reserve, and that comes out of our margin for those sales, and that token reserve effectively funds the rewards ecosystem. So the reward stores are something we call the Zen shop, where people can go online. At the moment, that's going to be limited to the products that we sell, but over time, we would want to expand that into all the kind of things that you might see, again, looking at a Flybuys or a Qantas frequent flyer as an example. So things like holidays, gifts, rewards, discounts, things that you would want to get as a consumer. And we fund that through the money that we're collecting through the token ecosystem. Consumers come online, they spend the tokens, and the tokens at that point are burned. So effectively, the tokens are then taken out of circulation. What's different about this from an existing loyalty and rewards program is that in an existing loyalty and rewards program, I think we're all used to the idea that to get a free flight from Qantas, it takes a fair few more points this year than it took last year. So you've got this depreciation of the value of your points over time. Whereas with the tokenized system, the opposite is true. There's a finite number of tokens minted. So our Opal tokens, we minted 1 billion of the Opal tokens as our initial minting event, and there will be no more than that in the system under that Opal token. So as they are consumed in the system by redemption for rewards, the number of tokens goes down. Our token reserve hopefully is going down at a lower rate than the amount of redemptions. And so the value of the tokens over time goes up, and what you can get with your tokens over time goes up, creating an incentive to hold the tokens and to collect them, as well as creating a real value for consumers and a real faith in consumers that this is something worth keeping over time and building up. For our distribution partners, they can use tokens to do things like get free stock through their wholesale channel to increase their profitability over time as they become a better and bigger distributor in the network. And over time, this system evolves. So it evolves over time in terms of the reserve value, it evolves over time in terms of the value of those rewards, and it evolves over time in terms of the kind of cool stuff that we can put into this shop to drive consumer behavior. And ultimately, what this means is that for a consumer, it's about willingness to pay. So as a brand representative working with brands, what we are really trying to do for those brands is to get them the highest value for their products, to get the highest value in the market. So attaching the tokens to the products creates that willingness to pay in the consumer. I might need to get some, I might be getting some personal care products every month for my wife and daughters, for example. I can do that transaction as a normal transaction, or I can do that transaction and get a token with it and build up tokens over time. So my ability to pay and my willingness to pay slightly higher prices for slightly more premium products is very important consumer behavior that's driven by the tokenization framework. And I think very important to say this was something that was quite conceptual, and we think we're one of the first movers, definitely one of the first movers in Australia for this kind of tokenized FMCG product ecosystem. But we have now really validated this as an effective selling methodology that does work in the real world. So in less than 2 months since launch, we've sold more than $1 million worth of products through the ecosystem. And we have about 500 distribution partners onboarded into the ecosystem, and we've signed up 2 exclusive brands, EZZ Life Sciences, with a number of products offered exclusively to us from their range, an established brand with a really good reputation in China, very high brand recognition. We have a $10 million 4-year global distribution partnership on board with them. And we've just signed up Biomiq Skincare as our second brand, which is a really awesome, innovative set of biologically driven skincare products for both beauty and functional skin conditions that comes from Australia as well. And we've just signed a $5 million 4-year distribution partnership with them. So the Opal tokens operate on the B2B blockchain and effectively are a utility and membership token. They're issued out via a QR code with a digital certificate. I think I've just been through everything with you on how that reserve fund and the reward system works. And I think what's really important is that these are very high margin sales for the business. So as we evolve the tokenized sales system, our blended margins will increase. And as we evolve our OTC part of the business, our blended margins will increase, but we're not walking away from our nutritionals part of the business. There's a really solid base of revenue in the business as well. So this is about 2 exciting new channels of sales which will transform the profitability of the business. I welcome you to have a look at our team, but I think I'll just highlight a few key members of our team. I think most importantly, the leader of our business, Tracy, who is the head of China. She's the day-to-day person running the business. We've got about 22 people working in the team in China. We've brought the number of staff members down significantly as we've restructured the business. And I think importantly, we've removed almost all the executive costs from the Australian part of the business. Our team is almost entirely in China. We do have a financial controller who works in Australia. But other than that financial controller and the non-executive board members, the whole business is focused on sales and marketing in China. And we have a very lean, but very motivated and very sales and marketing oriented team in China, led by Tracy. And Tracy has an amazing business background, having built some significant big retail and consumer brand networks in China over the years, in particular the Huibeijia company that she founded prior to joining Xenitra. We've also gone ahead to recruit 3 very important leaders in the business. Mr. Peng Man is the gentleman that I was mentioning to you before, leading our OTC business, who came from JD Health. He's a very experienced OTC medicine online sales and marketing leader and has extremely good knowledge of the platforms. And that is, as an e-commerce led business, knowledge of and ability to navigate the platforms, which are very similar in some ways to Amazon.com or the kind of platforms that Western consumers would be used to, but do have specific knowledge required and have specific sales and marketing expertise required. So we've got a really good leader for that part of the business who comes from inside the platform. Mr. Chen joined us to lead our tokenization business, a blockchain expert, someone who really understands how this Web3 infrastructure works, and that's the infrastructure that sits behind the blockchain-enabled transactions and the running of the reward shop. Very experienced person. And we also brought on someone, Mr. Ye, to run our OTC hospital. So quite important to note that as a wholesale pharmacy license holder, we now have the ability to sell into the hospital channel, and that's OTC medicines, but that's also prescription medicines. Now, that is an opportunity that is opened up by having that license. And so we do want to make sure that we have the ability to, if opportunities arise, and we think they will, to sell medicines into the wholesale hospital channel in China, which is also a significant upside to the OTC business that we have built. So to give you the key takeaways here, we are probably the only real proxy to FMCG markets in China that you can find on the ASX at the moment. And we're by far the most established player in that channel in terms of actually driving real sales. We've rebranded the company, and we have a very strong focus now on high velocity FMCG products with high repurchase rates, durable goods that suit the channels that we have to the market. We've restructured the business and recognized very significant cost savings, over $1 million worth of fixed cost savings in the business by reducing the amount of management in Australia and moving to a very sales and marketing focused structure in China. We've brought the nutritionals business back to its historical highest sales levels in the last quarter as we've recapitalized the business, now with a much reduced cost base and a much bigger focus on B2B. We have done the work to initiate our OTC medicines business, which has now been initiated in Hong Kong, including recruiting a very high-powered management team, and made an acquisition so that we are on the ground and running now with the OTC medicines business that does include that wholesale pharmacy channel into the hospitals in China. And we have really become the pioneer in RWA tokenized sales in Australia for FMCG, and we've got our Opal token is now minted. We've sold over $1 million worth of products in less than 2 months. We've got more than 500 distributors in that network, and I think most importantly, we have significant IP now around this tokenized selling system. So from a brand perspective, we offer the authentication layer. We offer the things that brands would want to know in terms of transparency for selling their products in China. And from the customer layer, we offer that reward system, that willingness to pay. So the IP around the tokens is really something very, very important that crystallizes what our company really has, which is the strongest channel to market in China. We recently completed the capital raising required to fund the next phases of our growth. So really, this is a business now that has got a very clear strategy, is well funded, and ready to take the steps to grow next financial year.
Awesome. Thanks, Anthony. Great presentation. Sounds like you've been a very busy person since your chair role. For people who have questions online, use the Q&A chat box. If you'd like to ask in person, you can also use the raise your hand function. I'll start with the first one, which is coming back to the tokenized sales. I mean, it's amazing growth that we've seen so far. What is it that has been driving the growth? And what's been the feedback from customers and distributors?
Yeah, look, ultimately, what drives these sales is the products themselves. So these are products that are in demand in the market. So selecting the right products is very important, and working with brands, particularly brands that have either a really great brand story or an existing brand awareness in the market, is absolutely key. So there's no magic to this. It's products that people want being sold to them, at a price that they're happy to pay. So it is a traditional FMCG sales channel, but I think the additional value of the tokens does actually create quite a lot of excitement, and there's a lot of event-based selling that the team does. So I think that it is cool. It is something really nice, and people do want to collect and build up these tokens, and consumers in China are very used to this. It's not a new idea to them, but it's a new idea for being able to do this with FMCG products.
Excellent. We've got a question which has come through, which is, when do you expect sustainable operating cash flow positivity?
Yeah, so I think it really comes down to two factors there. It's increasing the margins as a blended margin across the different parts of the business, and obviously you can see from the segments that we're focusing on growing that we want to increase the total margin on all sales, by bringing in more of the higher levels of sales. And obviously the second part of that is the fixed cost base. So the fixed cost base of the business has been slashed significantly. So we think that cash flow positivity is very achievable, in the medium term as a result of those changes that we've made.
Great. And just to follow on from that, is extra capital required between now and when we turn cash flow positive, in your view?
Look, the companies like ours do require capital to grow, and it's a matter of how fast we want to grow. So the answer to that is not necessarily, but depending on the opportunities that might come up, particularly in terms of things like potential acquisitions or initiatives that might give us faster growth, it's not off the table, but it's not required at this time.
Perfect. Moving on, in terms of the OTC versus the nutritionals cross-border segments, how do these two compare?
Yeah, so I think the OTC segment is obviously it's newer and something that is emerging a little bit faster. The nutritionals part of the business is very established. I think everyone would remember the times of the Daigou and the boom of milk powder type and infant formula type sales into China. So that market's still there, but it has matured. And so when I say matured, the players, the brands themselves are now more present in the value chain in terms of controlling price, and these have become more like commoditized markets where prices are reasonably fixed, and margins have gone down. There's a lot of hands in the supply chain as well. So I think the OTC medicine business has got more growth potential, and it also has significantly higher margins. So it's a newer segment, and it's also something that we think is a bigger overall market. So, I mean, everyone knows how big the pharmaceutical industry is as a whole. So, and I think importantly, it's also something that's very counter-cyclical. So it's very robust. The OTC medicine segment is very robust to economic ups and downs. It doesn't really matter what the S&P 500 is doing. Everyone's still going to get a cough or a cold or have an upset tummy and need to deal with that. So it's not a discretionary item in the same way that some of the other products have been discretionary in the past. So I think there's a counter-cyclicalness to the OTC business. I think the overall market is bigger, margins are significantly better, and it's newer.
Yeah. No, I think it makes sense. It's nice to have a bit of a defensive layer within the overall business. Just following on from that, you mentioned that you think that the OTC is where Daigou and infant formula was probably about 5 years ago. Are you able just to give us a bit of a broad framework as to roughly what kind of growth we were looking at, or what you think this could be?
Yeah, I think the most important piece that's driving that growth is the change in consumer behavior that I mentioned, and I think that the segmental analysis when we look back over the last decade, where we see that growth from almost no e-commerce based purchases of this product category to now a quarter to a third of products in the market being consumed through the channel. That tells you that you've got a very fast growing segment, and obviously as the population in China becomes richer and becomes more modernized, people are accessing self-medication more. So you've got a consumer behavior that's changing in terms of the channel, which is driving growth in the channel that we're operating in. And you've got consumer ability to pay and willingness to self-medicate also growing in terms of that demand. So it's a very big market and it's a growing part of a growing market.
Yeah, on that, I mean, it really does sound like there's two tailwinds which is coming through. One is from the increase of digital commerce penetration, and then the other is the increase in that cross-border. What kind of penetration are we seeing in each now, and where do you think this could get to?
So I'm not sure I 100% understand what you're asking there.
Just in terms of the tailwinds, I mean, digital commerce penetration would probably normalize over time. So, what kind of growth rates are we looking at right now, or what kind of penetration, and where do you think, things will start to taper off?
Yeah, look, my understanding is that digital commerce penetration in China is sort of on par with the rest of the world now. Obviously, operating through much more through particular country-specific channels, country-specific payment gateways. But in some ways, it's even probably a higher level of penetration in the Chinese market compared to the rest of the world, particularly with apps and platforms in China being actually much more sophisticated in many ways in terms of being able to capture payments within the platform, not needing to go out to have different payment gateways, to have fully integrated apps that allow people to buy within chat and to transact within chat in a way that they can't do in the Western world. So I would say it's probably actually even a little bit more mature than the West, the way that people actually interact with e-commerce and digital purchasing in China compared to the rest of the world, which sometimes I think can be surprising for Australian and American people to hear that. But I think in this way, the Chinese consumer is actually a little bit ahead of the Western consumer.
Mm, mm. A few more questions which have come through. So one is, do you plan to go back to the group tourism business previously Biomiq was heavily invested in?
No.
Okay, easy. The next one was that given the evolving regulatory treatment of tokenization and digital assets in both Australia and China, what legal and compliance work has been undertaken to ensure Opal remains compliant? And where do you see the greatest regulatory risk?
Yeah, excellent question. A lot of work has gone into that. So we're operating under a legal framework that is based in Hong Kong. So in Hong Kong, Hong Kong has been designated within China as a hub for these kind of digital asset creation. So there is a regulatory framework that governs the tokenization businesses in Hong Kong, and we work within that Hong Kong regulatory framework. So the Opal system has been built to be compliant with the Hong Kong laws and regulations governing these assets. Part of that is that we've built the tokens on the BNB blockchain, which is the allowable blockchain for tokens and commerce within China. So it's new, but it's an understood regulation, and we're obviously operating in full compliance with the Hong Kong laws that govern this. In terms of Australia, digital assets are something that ASIC is looking at, and there's a number of guidance documents that have been put out by ASIC around how they're going to treat digital assets, but a final framework hasn't actually been arrived on. So my understanding is that ASIC is now in a phase of consultation with stakeholders that's going to be wrapped up before the end of this calendar year, and that some final regulatory frameworks and guidance will be provided to industry probably towards the end of this year or potentially early next year. So there still is some uncertainty in terms of how ASIC would regard this kind of activity if it was to take place in Australia, which it's not. It's entirely limited to the Greater China region at this stage. We do think that there is an opportunity actually in terms of the IP and this methodology going more broadly than China. I think it's really actually very cool. I mean, to be honest, it could be something that really disrupts the whole loyalty and rewards program if you get it right. I think people would love to have a decentralized loyalty token that they could use that appreciated in value rather than a rewards point that got devalued depending on what Qantas and Hilton decide to do every year with the price of hotel rooms and flights. It is an opportunity and it is a really a core capability. That regulatory framework will come into play with some certainty, we think, towards the end of the year in Australia, early next year. What does it mean for the company in terms of being compliant if we did want to do those activities in Australia? It may involve the company needing to hold an AFSL license if the token did start to have characteristics that were more currency or tradable type of characteristics. But at this stage, we don't think that the tokens that we're operating with do have any of those characteristics. They're essentially what's called a utility token. It's basically a rewards point and a loyalty program point, which doesn't require that. But yeah, we're on top of that. We're keeping in charge of it. We're not planning to do anything outside the Hong Kong framework until there is full regulatory certainty. But that is an opportunity that may arise once the rules are made clear in Australia.
Yeah, I mean, it does look like blockchain's the future. So you're definitely ahead of the game. And then, if this all comes through, then you'll have that first mover advantage. So it's all very exciting.
Yeah,
Got a
awesome.
question which has come through from Anthony. Anthony, I'll hand it over to you.
Um, Hi, Dr. Noble.
Good day.
I just had a couple of questions. One is what's the size of the OTC market, the addressable market size for the OTC market that you're looking at in China? And then if I'm looking at, sorry, I just
Yeah, go ahead.
ramble off my questions. And the other one was what sort of competition are you seeing in either the nutritional side and the OTC market? And then I had another question on, you spoke about focusing in the nutritionals and the large B2B customers. But why wouldn't, say, a Danone go direct to a large distributor themselves? And then a question on the tokenization side. Does the RWA tokenization eliminate the risk of companies having to find other ways of dealing with counterfeit goods?
Yeah, awesome. A lot there. Start with OTC market size. The OTC market is tens of billions of dollars in China. It's a massive market, and it is obviously a little bit different to the rest of the world. There's a lot more hospital pharmacy compared to retail pharmacy in the channel overall. And then in terms of the digital part, as I said, that's a very growing part of it is the digital pharmacy part, and that could be online pharmacies operating with Chinese registered products as well as the cross-border part, which is a segment of that. And yeah, it is competitive. It's not, but it is a big market. So it's a large market. There are a lot of players in the market. The four major digital platforms do dominate. So in the sense, the channel to the market is very much concentrated in the existing platforms. But within those platforms, there are hundreds and thousands of stores that are set up. So it's a lot more fragmented inside the platforms than we would expect in Australia, where you've got, for example, a Chemist Warehouse website would probably do half the online pharmacy in Australia. It's not like that in the sense the platform might have, JD Health might have half the market, but on that, there's probably hundreds of different storefronts. So the ability to manage those multiple storefronts and the ability to work within the platform's rules. So there are particular rules in terms of how you can promote and advertise, quite strict rules about how you can promote and advertise the products. So being able to work within the platforms to drive demand to your store is actually quite a complex thing, quite an important corporate skill that the team has. And that's working with things like discounting programs, how to appear at the top of this, what people would call search engine optimization, in this sense, like a platform optimization to appear higher on the consumer search, to be brought up the list in the platform is a very difficult skill. So it is competitive, but I think we've got a team that's very good at doing what they're doing. I think we're going to build that team as well over time and potentially build more and more of those digital storefronts into our network as we grow. So there is it is it's competitive, but we think we've got the right strategy to compete with it. I think you asked about why big multinational players don't come directly into the Chinese market in the
Yeah.
nutritional side. It's very, very hard, and a lot of people don't get it right. The likes of Nestle have pulled up stumps out of China after not being able to make the business work. So there's a lot of network needed. There's a lot of particular sales and distribution skills needed to operate within the China market. So very big players like Danone, like Nestle, do not operate within the Chinese market under their own auspices. They operate through a network of distributors that sort of form tiers. There's master distributors, and then there's smaller distributors that sit underneath them, and we're one of those smaller distributors that sit underneath some of those master distributors. So there are a lot of steps in the value chain, and it's very complicated. And there's a lot of particular in-market knowledge that's required to make the sales and the distribution of the products work. And it is also very regional. So in the same sense that people talk about the US being kind of like 14 different countries that, they have to be managed with different strategy. China is very similar to that as well. So different regions within China have distinct sales and distribution frameworks and networks of companies that need to be managed. So it's quite difficult to do if you're not a Chinese local company, which we pretty much are.
And I think there was
Missed
one
the
more
last
just
bit?
on RWA and the impact on counterfeit goods.
Yeah, very, very important. So it's one of the, I mean, my background is, I'm non-executive chairman of this company. My day job is running FMCG companies in e-commerce. And one of the biggest questions that companies always have, brand owners always have, is going to China counterfeit. 50% of the pharmaceutical products, the estimate is 50% of pharmaceutical products in the Chinese market are counterfeit at any given time. So it's a huge, huge problem, and it's a big problem for brands. It's also a really big problem for consumers because one of the problems with counterfeit products, particularly in the medical side, is you don't want to be taking your blood pressure medication at the right dose one week, and then the next week you get a counterfeit product and you're not taking your medication and it has a health effect for you. So it's got a patient impact as well. So yes, this is one of the most important benefits for brands. There's two real benefits for brands to the tokenization. So we can unlock an authentication layer at the product level for brands with the tokens. And then there's also a traceability element as well. So the number of tokens is absolutely visible, it's absolutely transparent how many tokens have been given out. So for example, we minted 1 billion of our Opal tokens. That's going to equate to about $20 million worth of sales, that particular token pool. So you'll be able to look and say, if you're a brand owner, let's say we're going to do your particular type of product, we could build a token for you that had an authentication layer just for you. And then you could also look on the blockchain to say, well, I've sold you $20 million worth of products and you've issued $21 million worth of tokens. Where's that other million come from if I've only given you that many authentic products? So the authentication at the consumer end for confidence, okay, I'm definitely getting the product that I needed or that I've paid for, is very important. And from the brand, that transparency through the chain to say, okay, we know the ratio between the tokens and the product sales, and is it matching up? Is the right number of products that I've sold to you actually making it in the market, not any more, not any less? So yeah, it's an amazing part of what it can do.
Amazing side benefit of the tokenization. One more question which has come through online, which is looking 3 years ahead, what would success for Xenitra look like? Is the key objective to become a larger cross-border distributor, or do you ultimately see Opal evolving into a broader technology platform that third-party brands can adopt independently?
Yeah, both of those things is the answer to that question. So Opal is, as I said, a finite token. It's our first token. We didn't call it the XEN token. We called it Opal to reflect Australianness. We think Australian products are probably going to be under the Opal token. We're going to mint more tokens over time. So as brands emerge, we could mint custom tokens for individual brands. We could mint a mega token for XEN at the end of 3 or 4 years. when we have all the functionality that we want. And we can build more functionality into the tokens in the smart contracts. So these Opal tokens are utility and membership tokens for the reward system, but there is limitless number of things that can be done in terms of functionality with the tokens over time. But that does come back to the regulatory question that was asked earlier, which is at the moment, the regulatory system, the world is, the regulators are catching up to what businesses are doing now with tokenization. So there is some further regulatory crystallization that needs to happen in various markets for us to be able to go into those markets. But looking 3 years ahead, if we have clarity on what can be done in Australia, there is no reason to think that we couldn't be tokenizing real world asset sales in Australia, in the US, in other markets, working with brands, working with customers to develop tokens that are customized to the needs of those particular individual supply chains that they might have, the challenges that they might have around whether it's counterfeiting, whether it's expiry of product, for example, is something that you can deal with tokens as well. Logging the day that someone opens the bottle of medicine, making sure they've complied with their clinical trial protocol and taken the right amount of the drug. I mean, there's almost limitless stuff that can be done with this. But I think looking 3 years ahead, I do think we'll have clarity on the regulatory side by then. And I think the more we can prove with the simplest possible token, which is the one we've minted, with the simplest possible start, the more we can prove just how strong this is as a demand driver, as a pull factor from a marketing perspective, the more brands will want to work with us. And then those additional benefits get unlocked. And those are all revenue streams for Xenitra to charge customers for different parts of that and for us to capture more value. I think really importantly, as a business that effectively connects brands with consumers, this makes us more than a distributor. It makes us a company that has real IP and that offers real differentiated value both to the brand and to the consumer, which I think is a very important evolution of the business.
Excellent. Well, there's still a few more questions, but I think that was actually a really good big picture note to kind of finish the conversation off on. A lot of things for us to think about. But you've done a great job in terms of turning around the business, and the tokenization sounds like a great potential story going forward, along with the other two key pillars.
Yeah, no, thanks. And I think really important to note, I'm just the storyteller, and the governance person. The real people driving this business are Tracy and her amazing team in China. And I think all gratitude and praise should go to them.
Excellent. Thanks for your time today, Anthony, and thank you everyone for joining.
Thanks.